Welcome to the StockMiner.com studios. I'm your stockminer, Brian Johnson. Pretty slow end to options expiration week. All the fireworks happened at the beginning of the week, and you can see the devastation left behind here on the chart. Now, the Nasdaq did manage to close up by the end of the day. The S&P and Dow were both down, so maybe that's indicative of a little bit of a bounce coming into next week. As of right now, I charts I have to stay neutral to bearish on the markets right now, but we did start to see what looked to be some pretty decent buying and or short covering here towards the middle of the day. So we will be watching closely. Now, beginning of the week should tell us for sure what we're going to see. But based on what we saw this week, there's no reason for us not to remain in the bear camp for the time being. So let's watch this very closely and see what we get early next week. However, it is Friday video, so let's talk about what we did see. This looks like a little double top area happening here. Got nice breakdown below these areas. My trades for you this week were above 10,500 and below 10,350 for the more aggressive, then 10,300, really 10,200 for the more conservative. We got a little bit of an opportunity to trade that today, and I'll show you on the daily where I said, maybe good for 50 points. Sure enough, that's exactly where it fell. But we didn't get, we got a lot of good trading in here. For the more conservative, you're still going to want to wait until some of these major levels are broken. Man, I sound like a broken record. Here's what we saw right down into this 150-ish mark today, and that is where we bounced on the Dow, coming right back up to finish just above 10,200. So good for maybe a few points if you play the Dow, that is. And you can see now we are, for the week, we closed below the 50 week yesterday, and we gave another close below it this week. So on the way back up, expect that to be a little bit of overhead resistance if we see a bounce. Otherwise, guys, it's still going to be the 10-100 mark for the next shorting opportunity here. Here was the Nasdaq bouncing at this little double bottomish area and then finding its way back up into some overhead resistance. Didn't quite reach those moving averages, so not a perfect retrace there. And here you see us putting in what could be a potential reversal candle for next week. It's really, really dicey in through here. This is going to, I think, start to look to me more like a symmetrical triangle on the NASDAQ, but we'll have to give it a couple more days to really work its way out. From a weekly, notice how we did get back, and we actually did close below the 50-week moving average. So a break below it last week, a push above it this week, only to come all the way back down after that little double topping action we saw middle of the week. Here it is on the SPX. Now, my longs were above this 1100-ish area, and then below really 1085 for the more aggressive, 1080, and then 1075 for the more conservative. The 1075 worked really, really nicely today. Even below 1070 was good for a few points down here, at least 5-6 points in that play. And it has been difficult to pick up these big moves like this. You've really got to be on your toes to catch some of this stuff. So the 1085 mark was a little bit more aggressive, but played out beautifully for you, giving you a good 10 to 20 point move by the end of the week, depending on where you took profits and how you managed your entries and such. Still was a very nice play in and around this area. So whether you went short at 1085, 1080, or 1075, you did very well this week on your trading. Wasn't a lot to do and isn't always something to do every day, but welcome to the wonderful world of trading. We took conservative trades, and guess what? We made money. That's good by the end of the week. I am expecting a more major type of trend to form out of this. Right now, I have to be a little bit more bearish in my bias towards that. But once we start to really, really get a nice strong trend, you guys will be definitely able to jump in and play it for more than 5 points at a time or 50 points at a time if it is such as it is on the Dow. All right, here we have the break back below the 50 was your place at the 1085, more aggressive area to get short. Playing right down into some light support down here, but holding very nicely today and then bouncing up the rest of the day. Some people might try to play this off as a hammer. I'm not convinced of that yet. We got to be very cautious about looking at it as such. Also coming down into this blue line here, I'd say we almost made it, pretty close to it anyway. Still might get a push down into this area before it's all over with, but you can see where it wants to be pulled, below the 20, below the 50 week, and now wants to be pulled right back into that blue line. Here was the VIX. Curious, VIX way down today. And the markets, for the most part, really down too. I mean, the NASDAQ was up at 0.04%. Isn't a lot to crow about. So the VIX down and the market's down. Which one's right? We'll have to wait and see. Could be that the VIX here is showing us, could be tipping its hat. This is what's kind of got me curious. I'll talk more about that this weekend. But the fact that it went down today while the markets were also down, and this was down a lot, like 3.5%, that's a lot on the VIX, shows me that the fear is coming out of the market. Maybe there is a little bit of anticipation of a bounce coming. Maybe. Keep that in mind this weekend. From a weekly standpoint, too, still in the middle of all of this garbage, ultimately in my quote-unquote yellow zone for fear. Apple on a 60-minute played itself sideways all day. 24-cent move by the end of the day. That's nothing in Apple. So you can see the actions and reactions we've had over the last couple weeks. Just still nothing to trade. And look what it looks like on the daily. Flat. Man, this has been a boring stock. We've had some opportunities intraday for some trades on Apple, but right now it's just nothing. There's no reason to touch it. We did not make, this is the second close, below that 20 week moving average. Now we have to be very cautious of this 240-ish level below us. Now this isn't the most bearish of candles, even though it is below the 20, so still going to give some props to the bulls. They've still got a good opportunity here. If the market bounces next week, no reason to think Apple won't bounce with them. That should maybe give us an idea of its overall relative strength or weakness. FAS on a 60-minute also just down ever so slightly, about 1%, 19 cents today, with a gap, a run down, a run back up. These that I call them V-type days are very difficult to trade unless you really know what you're doing down here. Otherwise, anything that ends up in these type of a hammerish candles or doji candles, indecision candles, are very difficult to trade during the day. FAZ then doing kind of the same thing, ending right at a doji. We got this push up. Here you see the break above the 15, above 15.50, right into the $16 mark. The gap up to 16, up to 16.50, back down to 16. So you can see how this is kind of playing out. These support and resistance areas we've been talking about have worked beautifully. Notice today how we started the day at 15.99. I said a break up over 16. I'd really watch this 200 closely. Got to keep it on your charts. Today we got just above it by 15 cents, 16 cents or so, before running right back down below it. So if you took the trade, it was a great opportunity to make some money. Pretty much spelled this one out for you here. We did above 15.50 to 16, above 16 back to this 200, and that's precisely what we saw play out. This was great opportunities. Even through this mess right here, it was still bullish in my mind. Just waiting for the breaks above 15 for the more aggressive, above 15.50 otherwise. The FAZ trades worked out very well these last few days. I hope you guys were playing along because I'm very pleased how those all worked out. Same with the indices. Called the indices, I think, very well this week, even though we had a lot of volatility. We were up, we were down, and a lot of chop, but we did very well here in the trading, just watching the charts. And if you have your trend lines in the right spot, if you have your support resistance in the right spot, and you understand psychologically why these things are put in the places they're put, man, it can make your trading so much easier, and it'll give you so much more confidence. Okay, guys. All right, I want you to think about what we may see over the weekend. One of them is this little 1, 2, 3, 4, 5. I don't know. Potentially here, this could be lending itself to a pullback in FAZ, and And we're going to talk more on Sunday about what we're watching for coming into early next week. Will we see the bounce? And will it be, what kind of a bounce will we see? Will it last all week? All those are things that I'll discuss in the Sunday's video. See you then. Have a great weekend.